the new space going for it, so you want to keep an eye on that counter as well. DLF is looking to sell stake in the rental business at this point, so DLF is a stock in news. The other one that we're keeping a focus on is Sobha Limited. DLF 2.5% higher at this point. Sobha Limited in focus today. We're talking to the management, JC Sharma, now to talk about pre-sales, FY16, and more importantly, how FY17 is looking. Mr. Sharma, thank you so much for joining us. The FY16 numbers are a tad better than FY15 at this point. Take us through the sort of the outlook as we step into FY17. Can we continue to see an increased pace of improvement, or do you think the run rate is likely to continue on the same pace?
See, if you look at the macro environment right now, what we are observing is that with the declining interest rates, declining inventory levels of the developers at all the regions, and somewhere the Indian economy is showing clear signs of improvement, the real estate demand in the current financial year is expected to be better than what it was. Other way of looking at also is this industry is primarily a cyclical industry, and at macro level it has seen clearly last 3 years continuous decline. In my view, even except the Bangalore market, the most of the other regions in financial year 15-16, it must have shown lower volume growth. In that backdrop, when we look at 16-17, we believe that there may be some transition challenge with the RERA Act becoming a reality now, but the declining interest rate and improved economic fundamentals should be giving far better results in this financial year than what we have witnessed in the last preceding 3 financial years. In that environment, we believe that Sobha also should be doing better in other markets and should be able to sustain its improvement in the Bangalore market. So far this year, our Bangalore market has done relatively better. Going forward, that kind of a trend should continue, and other markets should bring in more volumes.
Then I want to build on that. There are two distinct moves that you've made in the recent past, Mr. Sharma. One is the move in Mysore, the pre-launch that we saw, and Gurgaon as well. As of now, you're in your revenue mix. How much is Bangalore-centric and how much is others, and how do you see that changing in FY17?
See, Bangalore continues to bring more than 2/3 of our sales volume and value. Our desired target is that Bangalore should be about 50-55%, and from the other regions we should be bringing the rest of the volumes. However, we have not been able to achieve this so far. Going forward with the number of new launches what we have planned in NCR as well as in other regions, especially in Kerala market, this year we believe that the Bangalore, while volumes will keep growing, the other markets should continue more, and maybe the Bangalore market will come down to below 70%.
The NCR project, your approvals are in place. When can we anticipate an official launch? Will it be Q1 of FY17?
We hopefully should be doing it either by this month end or first week of May. The show apartment is almost ready, and we are planning for a good date for that.
Okay. Cochin projects as well, that's what the market is looking forward to very eagerly as well, Mr. Sharma. As you talked about the Kerala market as well, how's the Cochin launches looking? What are the plans in that state as well?
There also we have got the final plan approval now, and we have to work out in this quarter the Cochin launch as well. These will be the 2 large launches which should drive volume in the current financial year. Net, what we are trying to convey is that as far as this industry is concerned, from the demand perspective, things look much better in this financial year. As far as the RERA compliance part is concerned, we believe there will be short-term pain vis-a-vis some of the developers while adjusting or migrating to this RERA compliant scenario. But hopefully once that transition is over, the customers' confidence should improve, because they have to not to worry anymore after that act becoming a reality, and this should bring cheers to this industry.
What is the biggest hurdle in the transition to RERA, Mr. Sharma? Because we've as much as the real estate segment is cheering regulation, is cheering some amount of order coming in, which are some of the points that will hold back growth at this stage, which will, be that hard transition as you're talking about?
See, I think primarily the pre-launches will stop. Until unless you do not have the approvals, developers cannot launch the project, A. B, the usage of money, the end money usage, it will become much more clearer, because 70% of your money has to be deposited in a designated escrow account. See, the customers needs to understand that henceforth he will be getting an apartment or a villa on a carpet area basis. So they will be able to judge the efficiency of the usable area, then to only go by the per square feet rate. I hope with this kind of a changes, it may take some time for the developers to adapt themselves to that kind of a new era, but customer is prepared to welcome these measures, which should hold good for the industry as a whole.
Okay. One final question then, Mr. Sharma, before we let go. Will this then make you rework how you do pre-sale guidance as well? Because this year, your pre-sale guidance was much higher than what you were able to achieve. Like you're saying, it's been a tough environment. And it's been true for industry. It's not a Sobha issue in particular. It's been true across the industry. Given the new regulation, the new norms and marketing and funds and everything as well, will it make you relook or not do a guidance at all for FY17?
See, we cannot say we need to deliberate it before our board, but whatever projects today we are selling, they all are approved projects. So prima facie, we are not worried, but giving guidance or how much guidance kind of a thing, we leave it to our board.
Mr. Sharma, all the very best. Sobha up in trade today, 2% higher. It is a transitional time in FY17 for the entire industry. We spoke to DLF on the same as well. A welcome move from the government, but tougher times ahead.